Financial Argument. Follow us on YouTube.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. On a week that gold and silver have surged higher to the upside, we invited our good friend out of Denver, Dave Kranzler, back on the show. Dave, can we hear you screaming in the background?
Depends on what you want to hear me scream about. There's a lot of things I could scream about right now.
Eureka!
It certainly is nice to have you on for a change and have the metals up quite substantially over the last few weeks.
Well, thanks for having me on again. I love being on your show. It's your audience gets what's going on, and I'm sure every person who's listening right now is kind of basking in a little bit of victorious glory right now, because I think the precious metals have pretty much surprised everyone so far year to date.
Yeah, well, we were trying to get Jeffrey Curry from Goldman Sachs on, but he declined our call.
One of the Jeffreys, either him or Christian.
The Bopsy twins.
That would be the day if we had Christian on the show. So let's get your take here on the action this week, particularly in the aftermath of the FOMC on yesterday. We're recording this after the market close on Thursday, the 28th. Both gold and silver having another strong day here. A little bit of subdued action yesterday with the FOMC, but further outside breakout, both gold and silver today. Gold's up really about $30 from FOMC news yesterday, about $20 on the day. Silver's up really about 50 to 60 cents from its lows after right on the FOMC release. So what's your take on what we're seeing in the market here, Dave?
I have to say, I think the metals are climbing the proverbial wall of worry. And I actually penned a blog post this morning in which I'm suggesting that at least year to date so far, the precious metals are the market story of the year. And there's been obviously a lot of big stories in the market so far, but it's hard to find someone who is willing to go out and say the move that we've had since really, I guess you'd mark it from around January 20th, depending on what you look at, but the move that we've had, I think is just taking everyone by surprise, and it's basically kind of occurred without any kind of pullback. And even some of the hardest core precious metals promoters, and I'm guilty of this to an extent myself, where you look at like the traditional indicators, like the way that the commitment of trade, the banks and the hedge funds are positioned on the commitment of traders report, with the banks being pretty net short gold and silver, and the hedge funds being pretty net long. And you look at some of the traditional chart technical analysis indicators, like where the price of gold is relative to the 50-day and 200-day moving average. And historically, whenever we've seen signals like we're seeing from the commitment of traders and the charts, etc., we usually get a pretty big manipulated hit or pullback, and even just maybe even a natural corrective pullback in the price of the metals. But everyone's seen the sort of the cup and handle pattern that gold is consolidating in, but we haven't had a meaningful correction since it started to take off in early January, and we're especially seeing that with the mining stocks. So and this week, in my opinion, again, I gotta say I kind of had to hold my fund partner back a bit from getting too aggressive. We when we want to put on a really bullish stance in the fund, we load up on JNUG, which is the 3 times junior mining index ETF, and that thing can really move in a day, either up or down. And I had to pull the reins on them 2 days ago. I'm saying, well, look, we've got options expiration, and they always try to take down the metals ahead of options expiration, and we've got the FOMC meeting, a 2-day meeting. So we had usually what would normally have been, especially over the last 5 years, a double whammy for the precious metals market. I think everyone was looking down, and most people probably have a sore neck from looking up at the metals this last couple days. So something's fundamentally changed beneath the surface that's not evident yet. I think we all kind of have an idea of what it is, between the discrepancies between the physical supply versus the amount of paper derivatives that are outstanding and that potentially will have to eventually be delivered into. Again, it's to an extent it's a head scratcher, because every time that the bullion banks have tried to smash the metals, and we saw a couple attempts this week where you wake up and all of a sudden, gold and silver are up, and all of a sudden when the COMEX gets ready to open or has just opened, boom, they go down, straight down an elevator shaft with no news that would have been a trigger point for causing a sell-off. And yet they bounce right back. And we haven't seen this type of market behavior from the metals in quite some time.
Well, I can certainly say, Dave, that after the beating investors have experienced in gold and silver over the last 5 years, numerous trips to the emergency room, I don't think any gold and silver investors right now would mind shelling out $50 for a chiropractor to fix that sore neck from looking up at them.
I'm one of them, trust me.
Yeah, and silver's made such a big move too. I mean, mid-December it bottomed on an intraday basis at 1362, and we're up almost 30% since that nadir. And silver has actually been appreciating faster in the last month, whereas gold and to some extent the mining shares as well. They in the middle of this first move, it was going mostly horizontal, but we're actually accelerating now that we've gone through April, with silver, basically going from just below 15 all the way up to today's close of what it closed at 1759 on a spot basis. It's a pretty big move.
And Dave, let's look back just for a moment here at that fraudulent silver fix. With $4 in market move in hindsight now, that looks more criminal than ever, doesn't it?
Yes, I was going to mention that, because I had actually written a blog post right after that, and I said that may mark the bottom there. And I think it was sort of a last-ditch effort by the banks, the bullion banks on the LBMA. I think it was kind of a last-ditch effort to clean out as much physical silver from producers as they could at as low a price as possible. I mean, that's the only way you can explain that. And to this day, the LBMA has never issued an explanation for what happened that day. I mean, it was obvious fraud.
We give the listeners a quick update here on what we've been seeing in the physical markets. And really, nothing has changed over the past week. Strong demand continues, but the market has been able to keep up with supply. Really haven't seen much change at all on premiums, but the demand numbers continue to be exceptionally strong. Another million Eagles taken down from the U.S. Mint, meaning that the coins are still on allocation. All the primary dealers are still purchasing every last coin that they can from what the Mint offers them each week. We're now up to, 18.9 million and change, so just under 19 million ounces right now as we close April. So again, we're on pace for a little bit shy of 60 million coins for the year on Silver Eagles. Regardless, on pace to shatter a record again from Silver Eagles. And again, they've been allocating coins the entire year. They've been on allocation since last July when they resumed sales after shutting them down in June. So we're really only about a month away from 12 consecutive months of either no sales or allocated sales by the U.S. Mint, evidencing exceptionally strong physical demand.
SD Bullion has a much higher percentage of silver versus gold sales. And I'm curious, 2 weeks ago we had that unusual Fed meetings, and a lot of gold sales were going through typical dealers. It was being reported that there was a huge burst in gold sales. Has there been anything that's interesting as far as the amount of silver that Silver Stackers is representative by SD Bullion sales that you could share with our audience as far as like what's going on this week versus that burst that happened 2 weeks ago? Is there more now that silver's going higher, or did we just see a relatively higher peak a couple weeks back ago when that burst of fear came through when Yellen was meeting Obama and all that other stuff was going on?
I haven't analyzed the numbers here in the last day or two, Eric, but just from watching order flow and our shipping lines and seeing what's going out, it's been dominated by silver this whole week. We had that big spike in gold, and still gold sales are strong, but not the level that we saw where all the dealers basically sold out of their Gold Eagles, Maples, Buffs a couple weeks ago with the emergency Fed meetings. But, I mean, that said, gold's sales do remain strong, but silver's dominated this week.
And more so than, say, last week and the week before that?
Yeah, again, that's just anecdotally from just observations from the order flow. I haven't really analyzed the numbers, so I can't give you any hard data off the top of my head, but that's the feeling I have from the order flow. And like you mentioned, we are normally more heavily skewed towards silver than the entire market is. We believe in silver. We started Silver Doctors, so it's not too hard to understand why we're more heavily skewed towards silver than the average gold line.
I think if you're looking for not just the wealth preservation qualities of gold and silver, converting your fiat currency into physical gold and silver. If you want investment performance qualities, I think you have to buy silver over gold right now, unless of course you got millions and millions of dollars that you're trying to hide, or not hide, but protect from what the governments and central banks are doing. Then you got to start buying 400-ounce bricks of gold. But I was just running some numbers, and gold right now is only about 35% away price-wise from its peak in 2011. I think it was September 2011. Silver is 65% away from its price peak in April 2011. So to me, that suggests that silver, and again, you can also do the same thing using the gold-silver ratio, because it bottomed out around 30 when the prices peaked in 2011, and currently it's at 72. So, if I told you could invest $1 in something and turn it into $1.35, or you could invest $1 into something and turn it into $1.65, what are you going to do?
And the one other, just added to my comments here, the one other observation I've noticed over the last couple of weeks is the order flow is being dominated by average working Americans. The average order size right now over the past couple of weeks is probably $400 to $500. Probably 99% of orders are for a monster box of silver or less. We're not seeing the big $100,000 orders, $500,000 orders, $200,000 orders that we saw a couple of months ago when silver was trading in the low 14s. It's the average working American who believes in silver and knows or believes that silver is going much higher over the long run. So it's good to see the average working man who believes in precious metals back investing in the market.
How about new customers? Are you seeing a lot of first-time buyers?
Yeah, we certainly are. I can look up the numbers here. Yeah, we certainly have, Eric. We're looking at about 1,000 new customers over the last month. So we're in the ballpark about 35 or 40 new customers a day. And now certainly some of those may well have previously bought from other dealers, but from the emails we're seeing and people asking questions, there's a lot of people that are brand new to the market. They're asking, hey, I'm new to this investing in metals. What do you recommend? Where do we start? What do you recommend buying? Bars, coins, eagles?
Could you have any way of quantifying that as far as your same time last year's sales flow, for example, or some other kind of comparison?
Yeah, it's skewed a little bit. SD Bullion is growing at such a rate that's skewed a little bit versus.
Sure.
If you look at, say, a growth rate of a big company, different market. If you look at Exxon versus a junior or a smaller oil company, obviously their growth is going to be a lot bigger, just because of the stage of the company is in. Last year, this time, let's see. SD Bullion's added about 12,000 new customers in the past 12 months and had about 10,000 this time last year. So SD Bullion's about doubled the customer base in the past 12 months. So while a lot of that is due to the market and new investors and brand new investors that have never purchased elsewhere, a lot of those are customers that have previously bought from other companies.
Well, it's definitely going to be interesting to see what industry-wide trends are as far as people come into the market and whatnot, because we're still probably about 1% or so of assets under management in North America being in precious metals, which is trivial. And that's mostly paper as well, the ETFs and so forth.
It kind of tells me, based on what you're telling us about your customer base numbers, tells me a lot more people are becoming aware of what's going on in the system. And I think obviously Trump's support, not that he's going to be able to fix anything or even has a plan to fix anything, but just based on his message, the amount of support that he has tells us that there's a lot more awareness that things are really messed up in this country, and people are looking for a way to seek refuge from that. And obviously buying gold and silver is the way to do that, or one of the ways.
Yeah, and again, this market hasn't seen anything about if this country really woke up. And I mean,
I agree.
When you're talking really wake up, that's something that could happen overnight, and there's just no way this market can accommodate that kind of change in demand. It's just, this market is nothing right now. If you're talking on a percentage basis of total assets, total people interested and involved in the sector, the physical investment gold and silver market is nothing.
I agree, and it's to Eric's point. If you have maybe 1% of the country investing in this stuff, and if enough wake up so that 1% moves to 5%, you're going to see. You're not going to be talking about $2 or $3 premiums on Silver Eagles. You're going to be talking about 100% premiums on them.
And that's why you're going to see huge moves in the miners as well, because what are people going to turn to when they can't get any physical gold and silver? They're going to go do what they're used to doing. They're going to type in stock symbols. The miners, whether it's publicly traded firms in the bullion space, whatever they can get their hands on, they're going to be buying.
Oh, I agree. And what's interesting that you mentioned that, and I guess there's 2 points on this. One is, and I was actually talking about this with the CEO of a junior mining company yesterday, and I said, this market action in the miners right now reminds me of what it was like in 2002 and 2003 when this thing was just getting started. When I started, the Huey index was at 45. But I remember you'd wake up every day and the market would open, and every day there would be 2 or 3 different junior miners that were up between 10 and 20%, and you didn't know which one. I always liken it to watching popcorn pop. You know that all the kernels are going to pop. You can't point to which one and say when it's going to pop. And, we saw that today, and I just happened to notice, and we actually happened to own the stock in the fund that I co-manage, but we had a junior that was up 20% today, and another one that was up 16%. And by the same token, that junior had a couple days last week when it was down, and I actually added to the position in that stock at that point in time. So, the market reminds me a lot of the 2002-2003 period, and he agreed with me. He kind of liked that analogy. But the other thing that I had always thought that we would see eventually, besides a day when gold and silver were trading in the market at 100% price premiums, I think eventually a lot of these miners that are producing miners will end up paying out big dividends in gold and silver, and that's one of the reasons why you want to own them. You'll get some sort of refined form of bullion in the mail as a dividend, as opposed to them paying cash dividends.
And many companies will probably hook up with firms like BitGold and do electronic gold that way for dividend payments as well. It'll be pretty interesting.
Go ahead.
A lot of innovation coming down the pike.
That's right. In fact, I had a long conversation with the CEO of BitGold a few weeks ago, and I'm going to feature it in my mining stock journal at some point. But he said they've got a deal with, I think it's in Peru. There's a couple of Peruvian mining companies, and they've got a deal with those companies where those companies pay their employees into BitGold accounts so that the employees are, in a sense, getting paid gold for their services. I thought that was really interesting, and we could see that as a wider trend. You're right, Eric.
Yeah. Well, the juniors have really rocketed higher. I mean, the JDXJ JNUG index was $20 and change at one point earlier this year, and now it's at 152 and change, so like 7.6 multiple above where it was on the low. So there's a lot of opportunity in mining shares, and our audience is more of a stacker community, generally speaking. But there's definitely something to be said for diversifying and having some miners in one's portfolio. And you can even own them outside of the banking system. You can have the shares outside of street name, and it's a decent way of getting some wealth transport ability to go through a currency and banking holiday and so forth. A lot of people in the stacking community have almost a dogmatic attitude about miners, but I think that there's a strong argument to be had for having some diversification and some exposure to the miners.
What's amazing about what you just said is you're right, and I think that's why a lot of people are still on the sidelines waiting for a pullback to jump into the market. I mean, you look at the moves that some of these juniors have made. Some of them have tripled and quadrupled since mid-January. But then if you go and you look at, say, 5 or 10-year price charts of these things, so you have to go back at least to early 2011 before the big takedown started. And these stocks, even the juniors that have made big moves that were around back then, they're just getting started if you look at them on the scale of a 5 or 10-year chart.
Yeah, I mean, it's like 10% moves into what is a mega bull run, and by the time this is all over,
this will just be getting started.
Yeah.
I mean, I pulled up a stock that I recommended in the Short Sellers Journal as a contra NYSE play instead of a short. It was a little silver mining company. It was a spinoff from a deal, an M&A deal that was done called Silvercrest Metals. Silvercrest Mines was taken over by First Majestic, and I was pissed about that because I thought they stole the company based on the price they paid. Right. I mean, I don't mean that in a pejorative sense. They got it on the cheap. But Silvercrest Metals was a spinoff, and I recommended it. The stock was just under 11 cents in early January, close today at 92 cents. I mean, it's like almost a 9-bagger in 3 months. So, and it's probably still cheap if the drill results that they released today are any indication of what they're sitting on with the property that they're drilling out. The stock's still cheap at this level.
And even a company like First Majestic, they crossed $10 today, and that's pretty hefty market capitalization, largest pure play producer, second largest. And they're 7 times appreciation in this year. It's just phenomenal what's going on.
It's remarkable. But I knew, just based on that acquisition of Silvercrest Mines, I knew First Majestic was cheap. When they did the deal, they distributed shares, a little bit of cash, shares in Silvercrest Metals, and then you also got First Majestic shares. And I think I was looking at it the other day because I just unloaded the rest of our First Majestic to buy more juniors. And I think our basis in the First Majestic was $3.21, and I was unloading it at $9.
And just for the record, I misspoke. Actually, the low for this year was on January 20th at $2.40 for First Majestic. So it's up a little over 4 times through to today. But still, I mean, that's amazing for a market capitalization of $1.5 billion. I mean, that ain't no junior, and it's
right.
Still.
But if you value this, if you say, okay, silver's going back to $50 an ounce, what do you think First Majestic's worth?
Yeah, exactly.
I mean, it's not $10 a share; it's $100 a share.
Yeah, it would definitely take out its old high. So you've been doing the Short Sellers Journal and the Mining Journal, and how are those going? I'm sure
They're
that
going well.
A lot of people.
The Short Sellers Journal, I took on a lot of subscribers early in the year when the stock market was going down, and I've had people. Actually, my churn rate in it, in terms of the people who have left because they just got frustrated with the market, was a lot lower than I expected. And I think if if you just bide your time and you're patient with your shorts, because I take the stance when I make a recommendation, it's like, look, if you're going to use options on this, at least go out to January of 2017. These are long-term plays, and barring like the Federal Reserve going completely Weimar Germany, which they could, the S&P is going to be lower between now and the end of the year. I just don't know what price path it's going to take. I mean, look at what happened today. It was up, and everyone thought it was going to close over 2,100, and it finished down almost 20 points. I mean, there's definitely some inherent weakness there. So I've had intermittently I get some new subscribers in there. The Mining Stock Journal has done really well since I debuted it in March, and again, I kind of was probably a little bit fortunate there with the timing, because I debuted it at the middle of this current run that we're in, and who knows if this is the middle, this could still be the very beginning. So, but what I try to focus on is I try to find some of the lesser known junior mining stock names, and I feature those in every issue. It's bi-monthly, and I so far it's worked, but I really don't want to feature anything unless I've spoken to management. So, and I've already got a backlog of names that I've talked to, and it's like every time I find one, I can't wait to write it up and publish it, because it's like, Jesus, this stock is cheap, and I want to get it out there before it takes off. So the next issue is actually coming out tonight, and it's the company I'm featuring has been around for quite a while. No one really knows it, though. It's not a very well followed name, and it's the market cap's under 30 million, and I think this thing is easily worth 3 or 4 times at current prices for gold and silver. It's easily worth 3 or 4 times where the market's valuing it right now, and they actually have a cash flowing royalty that funds their exploration and the advancement of a mine project that they're working on right now, to the extent that they've actually bought back a few of their shares. That kind of tells you how undervalued management thinks this stock is. So, and that's kind of the challenge, and what makes it interesting for me, because some of the ideas I've come across that I've presented, I've put them in our fund, and so far they've done well, which maybe isn't saying a lot in this market, but I'd say they've definitely outperformed the market at this point.
Have you been seeing any uptick in terms of new monies coming to your fund from institutional investors?
We really cater more to high net worth investors. We're not set up to take institutional money. I mean, we could probably do smaller institutions, but just our infrastructure, we cater to the high net worth guys. And we've had a few new investors come in this last quarter, but we've gone from my partner who kind of does the new investor communications and processing of new investor accounts. He's probably got about 10 new investors lined up right now, whereas this time last year he was whistling Dixie. So there's definitely, from that standpoint, there's definitely a lot more interest in our fund than there has been at any time in the last 5 years.
Well, it's encouraging to see new monies coming in, and we are seeing anecdotally indications of that throughout the industry. So, one more indication of a new bull market underway.
Well, and there's a lot of money on the sidelines. I was chatting with a guy the other day. I was having an email conversation who had just gotten done canvassing a bunch of institutional investors. And they all said the same thing. They're sitting on cash that they want to put to work in the sector, but they're waiting for a pullback. Mm-hmm. And when my antenna go up when I hear that type of sentiment being expressed, because it kind of tells me we're not getting a pullback yet. Because if everyone's waiting for a pullback before they put money in, we're probably not going to get a pullback for a while.
And if everyone has that sentiment and silver takes out resistance at 18, gaps up to 20, and should it take out 20, then you have all those people that, recognize that and want to jump on the train that's leaving the station and then potentially start chasing the market.
That's exactly right. And, this, because of the short interest that's in there, and I think that's, in my theory is that part of what's fueling this move in the juniors is that there's rampant short covering going on at the hedge funds. I mean, it was, for the last 3 or 4 years, it was basically open season. Hedge funds were just taking pot shots at all of these junior mining stocks from the short side. And a lot of it was naked short selling, because the naked short selling rules go unenforced. The only time we heard of Congress whining about naked short selling was when the stock market fell off a cliff in 2008, and all of a sudden
right.
The congressman, started grandstanding about it. But if you notice, have you heard anything since maybe 2010 about the naked short selling problem? No, of course not. And it's rampant in these junior miners because no one polices that area of the market. So my theory is a lot of the big moves we're seeing is just, hedge funds covering naked shorts in this sector. So, if that's the case, we haven't even begun to see, true organic investing going on in this thing. And this thing could get out of control to the upside very quickly because the market's so small. My fund partner likens it to, trying to fit Niagara Falls through a funnel. And that's kind of the dynamic that we could get here in this thing, especially if you look at the COMEX with the short interest on the COMEX. I mean, that thing could really get out of control quickly to the upside, and that's when the real fun's going to begin, in my opinion.
I forget pretty much our entire market right now is forget about fundamentals, forget about profits and earnings. It's traded all on momentum. So once this market starts to have some upside momentum instead of all the downside momentum we've witnessed over the last 5 years, all that momentum is going to be at our backs as a tailwind.
That's exactly right.
Is any last thoughts before we wrap the show this week?
Well, I'll tell you what, this was actually kind of interesting, and I've started off this week's Mining Stock Journal issue with this idea. I had a reader who asked me, are the mining stocks, am I supposed to take profits because I've got nice profits in them, or are these long-term plays? And I just said, look, these are long-term plays. Some of them are going to be 10 baggers. And even though it may seem like you have a nice profit in your position right now, and yeah, we're going to get some corrections, and you're going to be kicking yourself for not taking profits in the next corrective period that we go through. But if I'm right that this is like 2000 and 2003, if it's like that time period, I mean, we're going to be a heck of a lot higher a year from now or 2 years from now than where we are now. And if you sell now, you're probably going to look back and really regret it.
We'll wrap the show there. Dave, it's great to have you back on the show with us, and it's nice to have something positive to talk about in the sector.
I agree. It seems like it's been a long time.
Been down so long, up, look down.
I have to say, I'm still kind of approaching this market with muted enthusiasm, but as you mentioned earlier in the show, Doc, I mean, that's because we've been burned for so long. But it definitely feels like there's something a lot different that's going on fundamentally beneath the surface, and I think that's what's driving the sector right now. And I mean, this thing I predict will have a lot of power and a lot of durability over the next couple years.
Well, hopefully we're in for a long, hot summer, guys.
I don't think we're going to be getting any summer doldrums this time around. It's going to surprise people. I mean, we took out 1263.90 today. That was the spike high back on February 11th, and we got over that like a couple times in March, but basically the cartel was hell-bent on erasing the entire move, going all the way back to that February 11th spike high, and it's taken a couple months, but we are now back over it. And I think that that's pretty significant as we're also gunning towards 18 silver for next week. I mean, we're going to probably test that next week. And we got through the options expiration earlier this week, and they were not able to get any traction to the downside, much below 17. and boom, we got on the other side of the options contracts falling off the boards for the next near-term contract going on, and here we are. The momentum is back, and people are piling back in. It's definitely climbing that wall of worry of this new bull market, and it's pretty amazing to watch.
And just final closing note, the other thing that really is amazing is, just adding on to what Eric was talking about there, is that gold corrected, but it corrected in terms of time and not price. Over the last 5 years, we were all just sitting around waiting for the big hammer to drop, and it really didn't happen. And gold's short-term overbought levels really were corrected by time rather than price, which is really amazing to me, and it was nice to see.
Something you also see frequently in the beginning stages of bull markets.
All right, so that'll be a wrap. So for the doc, Eric Dubin, and our good friend Dave Kranzler, thanks for tuning into this week's SD Weekly Metals and Markets.